Nothing we say is investment advice. Please pause on all 3 pages of this disclaimer and read it.
Hey, what's up, everybody? Cowboy. Having a little issue with my camera this morning. I made the classic mistake of updating my whole recording system before the show. And if you ever do YouTube stuff, never do that. Update it like after the show. Give yourself a whole day to fix it. So that's all right. You don't get to see my mug on the screen today, and that's just fine. So Bitcoin right now is looking a little tricky. The problem really is it's coming down to the market's waiting for Trump to talk. It's kind of what it really comes down to. The market was really waiting for Trump to say something about the Bitcoin reserve. Hey, I don't know. It's fine. It's not a big deal. The whole market is really just on edge. They think that if Trump doesn't say anything, that it's not going to happen. And I get it. There's some truth to that. You do have to kind of make room for that type of thought. So if that's the case, look, Bitcoin's Bitcoin. Like the fundamentals of Bitcoin remain unchanged. You have all these, major companies using it, buying it. Like those of us who are in the know, like we get it. We're holding strong, diamond hands, so on and so forth. I can't seem to fix my screen resolution here. Gosh darn it. Anyway, so, I wouldn't worry too much about it. But yeah, we might see a pullback. Might see a little bit of a pullback, and that's fine if that happens. What is that going to look like? Well, I've got here pretty much a picture of that. So let's take a look at what that might look like. Give me 1 second here. All right. So this is a head and shoulders pattern, very kind of typical, almost newbie. Some of the comments I made to the private group this morning actually are with regard to this. And long story short, a lot of the big time traders oftentimes will see like a very obvious pattern that's painted, and they might know that everybody's looking at it and they might actually trade against it. So I did take a very high risk short with a very small position here. And usually what you would see with a trade like this is all this gobbledygook you see on the screen. I'm going to rebuild it so you all can see what I did and why I did it and how the metrics work. All right. So first of all, there's the pattern itself, the head and shoulders pattern. Now I do have some other data on the screen. I'm just going to leave it up there. These blue boxes, won't worry about that right now. That's just all structural data. But I'm going to go over here to the patterns area of TradingView. And for those of you really, really new, TradingView is free. Although if you pay a very small amount of money, you get a lot more utility as far as what you can do with TradingView. But at the moment here, Bitcoin is showing a very clear head and shoulders pattern. And let's see here. I think this is actually, hold on, let me fix this right here. And these are usually, they're pretty darn, I want to say the hit rate on these is above 80% with Bitcoin, right? So it might require a little bit of patience, but there's a pretty good chance we're going to see this head and shoulders play out. And how do we measure the targets on these? Why would I pick a certain target? Well, what I'm going to do first is I'm going to take a look at some of the impulses and retracements. And this could be a little bit of a clinic this morning. So market moves in two different ways. The market moves in impulses and retracements. And the retracements tend to be like not a lot of action. Impulses are a lot of action. So here's an impulse, hard move. Retracement tends to kind of look like this. And in the retracements, you often get like consolidations. So on a high time frame, this is very, very evident. If I were to back up and zoom out and look at the chart on like the, say the weekly, you'll see impulse retracement, right? Impulse retracement. Here's going back to the like the end of last year, meaning, well, really the beginning of last year, end of the prior year, you have a big impulse, and then you have this retracement right there, right? And you have a big impulse, and we're in the middle of a retracement right now. Even though we've been getting all-time highs, we are really in the middle of a retracement. So to see a little bit of low here and there is going to make sense. Now, if we do think that we are at the end of the bull market, then perhaps this 109,000, whatever that high was, would be the high. But I don't think we're there yet. We could be. We'll see about that. We have a lot of bullishness going on at a very high level, at an institutional level for Bitcoin. So I don't think that the bull market is over. And that being the case, we could expect this retracement that we're in to be temporary. So let's look at what that retracement might look like. First of all, we're going to look at an impulse on a lower time frame, And that's going from the 13th of January, so about half this month, all the way to that high that we saw last week, or earlier this week, actually. And that's an impulse right there. Now, the way that we can use this to our advantage, there's two ways. I'm going to first put a Fibonacci on top of this, and we're going to measure the Fibonacci levels. And the key levels here might be a little difficult to see on the screen, but if if you're already doing this kind of stuff, it will be pretty obvious to you. But besides that, I'll just point it out to you. Give me a second to find my tool here. All right, so here is one, the 786. There's another, the 618, and those are pretty key. 382 is also key, and that's where price is right now. It's at the 382. You can see that written in yellow right here. So we have those areas, plus there are head and shoulders metrics. There's ways to measure if this does break down, and that's an if. It could break up from here. Don't get me wrong. I've seen these not play. They just play out at a pretty high rate. They're pretty reliable, but technically it has broken down, but it hasn't closed below the neckline. This line right here, right there, that's called a neckline. Price has broken below, has not closed below. The short that I took is slightly premature, but I trade algorithmically, so I'm allowed to take that short. Mind you, we have this impulse, but then there's the head and shoulders metrics. How do we measure those? Well, what we do is we do a Fibonacci extension, and we start at the top of the head here. We go down vertically from the head to the neckline, and we have the targets. And again, a little hard to see on the screen, not much I can do about it, but you see this right here, 618, and this 1272, difficult to see. Those two are the two targets you would see. And they line up perfectly with the other Fibonacci retracements of 618 and 786. So there's a lot of Fibonacci confluence right there. So those areas, which are 97,000 and 93,000, are important to look at. Let's go ahead and move on. The next measurement that I can use to take a look at where price might go is I'm going to use a fixed range volume profile. Now, I've done this plenty of times publicly, so this isn't like a big secret, but you run this fixed range on the same impulse as the Fibonacci. At least that's what I do. And this has worked for me very well. And wherever the volume pokes out is where price is going to want to go. Now, this is one thing that at Algo Factory, we show you that everybody else does wrong. Everybody in crypto that I've seen does the wrong thing. They treat these order blocks where the volume comes out, where there's been a lot of price action in the past. I'm going to code this yellow. They treat those as if price is going to bounce off of them. This is actually incorrect, although it does look like that. This is incorrect. These are areas where price will be attracted to. Now, once price goes there, it might change direction, and that's an indication of the broader trend. But price actually moves towards these. It does not bounce off of them. What it doesn't do is it doesn't want to go where there's no volume, right? Price doesn't want to go in these gaps that I'm going to go ahead and code. In this case, we'll go with magenta. So it doesn't want to go there. It doesn't want to go all the way down to here necessarily. Now, if I were to measure volume a little further back, you'll notice there's a lot of volume here. So it may in fact want to head down to this area, but we're just measuring this impulse, the most recent price action for this particular look at Bitcoin. Now, there is some volume in here below this level where price is right now. There is volume there. So it's not like there's a complete gap in volume, but in the most recent impulse, the gap's a little further down. We'll talk about that in a minute. What we do have, though, are areas where price may want to go. And a key area here, I think, is going to be about 97,000, because there's another metric we're going to use, right? We have these Fibonacci levels that we've marked out, which are basically at 97,000 and at 93. And there's confluence there between two different levels. Now we have this volume that's poking out right down here at that level from 96 to 97,000. We also have this volume area right here at 98 to 99. Now, if price does not make it down here, if price goes up from here, that is a sign of strength. And there's reason to think that would happen, because if we look at the price action, we can see that price has repelled several times off this area. It seems that the market is protecting 100,000 right now. You got a lot of wicks where price tried to break down below that and price is forced back upward. So it may be a bit of a tall order to head down there, but by the same token, with that many buyers in that area, it's also liquidity for price to push down. Speaking of liquidity, let's look at our last metric right now for this matter. Looks like I need to change this here. So we're going to look at the Kingfisher, and let me go ahead and expand here. The Kingfisher shows liquidity for Bitcoin. So what I'm going to do is take a look at where the liquidations are on the exchanges, right? On the leveraged exchanges. And you have a fair amount going all the way down to 70,000. Now, I don't think price is going to go down to 70. It could. There is a possibility. Right now, there's a lot of liquidity down in the low 90,000 and in the mid 90,000. You got some at like 94, some at 96, 97-ish, and then you have a pretty good spike right here sitting at 91. So I think if we were to take a look at where price could go down, we got to pay attention to 94, 97, and 91. And we're going to take a look at that right now. Give me just a second. Okay, so that's where it might go. Now we're going to take a look at the bullish look before we end the live lab here. We got a comment here, Lisa. Hey, thanks for coming on. I appreciate that. Yeah, intellectual, maybe. I just kind of tinker around with numbers and hopefully I'm right. Usually I'm right. That's what makes it work, right? I'm more often right than I am wrong. But in this case, we're looking at from the liquidity standpoint, from the Kingfisher. I'm going to delete a lot of this gobbledygook here. And from the Kingfisher, right, we're going to take a look at the 91, 94, 97. And the areas that seem to line up are the 97. That's where price may want to go. It's an important level. It's also the bottom of this beautiful head and shoulders. So if price were to head down, I'm guessing that 97-ish thousand might be where it does. And if it bounces up, that would be very welcome. I would love to see price not go down there, but you got to want what the market wants. And so the bullish look here right now, let me take a brief look at the algos. There is reason for price to take a break and head down. There really is. Doesn't mean it's going to happen. And again, the bulls could hold this up right now. If anything, I would expect price to, let me see, let's look at this impulse, get rid of this data, get rid of that data. And we're going to take a look at this impulse right here. We're going to pretend like this head and shoulders does not exist. And we're going to look at this. So a move up could either go to 105, 103. That's from a Fibonacci standpoint. And that means that like the bulls are holding this up and the head and shoulders is temporarily at least invalidated. And like I said, I'd welcome that. My spot bags would like that. Let's see here. But, you know, obviously shorting here would be a hedge. And I actually have a small short, high risk. Looks like it's going to stop out. Your most likely area actually from a volume standpoint is in between 103 and 105, just from a volume standpoint. So maybe a spike up to 105 might make sense. So if price were to go up from here, you're looking at something like this. You know, it might not go straight. It might, you know, kind of wag on the way up, but basically something like that. Or, you know, you have a possible move down to basically this, I'm thinking the 97 area. And then let's grab our, you know, something like this. And it might not even last very long. It might just head right back up, and it could also go lower. So that's our look for Bitcoin on the day. Might go up, might go down. I know that's extremely simple, but at least we have some areas where if one of those things happen, we have some ideas of where it could go. And of course, I don't really have any algorithmic, aside from the high time frame or the high risk short I've taken, I don't really have any algorithmic ability or reasons to try to go ahead and take the trade on this. So we're going to wait for that. And as that happens, I'm going to let Algo Factory private live lab know that. So, and I do this, you know, all day long. First of all, every Thursday or Tuesday through Friday, we do these shows, right? And then I jump over to the private live lab. I'm usually joined by the Guerilla, and we go in there, we talk for another 50 minutes. People get custom charts. They say, hey, I want to see this. I want to see that. And we do that. We talk about other things that are going on in the world. We have the Guerilla with us, like I said, I'd say 3 to 4 days out of 5. Or I should say really 2 to 3 days out of 4. And it's a great thing. So come to algofactory.tech, learn how to trade like a hedge fund pro, and we will see you on the next one. And always remember and never, ever, 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 ever forget. And this is a joke. It's not real, but it's funny.
Join us or die.